Hello and welcome back to Morning Markets from True Potential. Paul Durrans, Investment Director. Today I'm joined by my colleague Kevin Kidney.
Good morning, Paul.
So if we kick off by just looking at asset prices yesterday.
Absolutely, Paul. So continued recovery in equity indices yesterday, led by Europe this time. Obviously, the main catalyst there was the substantial de-escalation between Russia and Ukraine. Main beneficiary from that will be European corporates. It gives more certainty to their export markets and it lowers the volatility of energy prices. So that's a healthy development there.
So it really just speaks to the importance of staying invested, and that's some of the messaging that we've been trying to give over the last 2 to 3 weeks.
Absolutely. I think given the moves we've seen in markets, the messaging of staying patient, remaining invested has proved a virtue in this environment.
Absolutely. And in terms of commodity markets, oil markets, what have we seen there?
Well, I think the news there isn't as good. So we've seen a modest cooling in commodity prices, particularly in oil markets. However, oil prices do remain elevated from where they were at the start of the year. So we're unlikely to see any substantial cooling in inflation markets over the next few months. In particular, I think this keeps the challenges ahead for the UK, and for UK households. We're likely to see that squeeze on household budgets and incomes continue and really start to increase into the next quarter and through the rest of the year.
In terms of what it may do is reduce the probability that oil prices might get to, say, $150 a barrel, which is something that markets were concerned with at the start of the month.
Yeah, I think some of the more hysterical forecasts for oil getting at $150 or $200 a barrel, you can put those to the side for now.
Yeah, that's good news. In terms of economic data, anything caught your eye yesterday?
So very strong housing data from the US. So the 10th consecutive month of double-digit house price growth. So that's house price growth there has averaged around 15%. For the last 12 months. That's important because these measures of house price growth feed directly into measures of US inflation. And given US inflation is over 7% and is already a bit of a headache for policymakers at the central bank there, we're going to have to see some enhanced messaging from policymakers about how they try and cool these parts of the markets which are feeding into inflation and try and bring inflation back towards target sometime next year.
Great. Thank you, Kevin. That's everything from us this morning. Thank you for listening, and we'll see you tomorrow.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.